People are always asking, like, what is the catalyst? One event that will cause us to V-shape and up. The US possibly passing the Clarity Act would be a catalyst. Kevin Warsh being installed and showing the market that he's more dovish will be a catalyst. The rise of agentic finance, I think, is a big emerging catalyst. I think as you start to add these up, eventually that scale goes like this and we enter a new bull market. So I think the bear market will be shallower, and then the ascent will be more grindy and slower because it will be fundamentally driven. But I feel a lot better about crypto today than I did at the depth of the 2022 market or the depths of the 2018 market.
Matt Hougan begins by asking viewers to ignore the short-term noise surrounding Bitcoin and instead look at what is happening beneath the surface. While prices may fluctuate and market sentiment may swing from optimism to fear, Hougan argues that the real story is unfolding quietly in the fundamentals. Institutional adoption is accelerating, global financial infrastructure is adapting to blockchain technology, and Bitcoin is increasingly being treated not as a speculative experiment, but as a new form of digital monetary asset. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
This is a unique crypto winner in that all of the fundamentals are doing really well in terms of the people who are building on this space. We have massive, major news developments every day, it feels like, right? Just a day or so ago, Meta announced it's rolling out stablecoins across WhatsApp and Facebook and Instagram. A day before that, BlackRock invested in Unity and Apollo invested in Morpho. I mean, the scale of interesting, exciting developments, particularly on stablecoins and tokenization, is incredible. I think this is very different from past crypto winners in two ways that are worth focusing on. First, in 2022, that was really a fairly existential crypto winner. Not only do we have major institutions like FTX collapsing, but we had US regulators that were effectively trying to kill the crypto industry. And we didn't have any sign of institutional adoption. This time we have a much more solid foundation. As a result, I think the winner will be somewhat shallower and maybe somewhat shorter before getting to its low. The other side, though, is I think that the rise out of the winter this time will be driven by fundamentals instead of narrative. I think a lot of people are going to look for fundamental proof, revenue growth, adoption growth, etc., before they reward crypto. And in the past, crypto was sort of surfing on narrative overlays. So I think the bear market will be shallower, and then the ascent will be more grindy and slower because it will be fundamentally driven. But I feel a lot better about crypto today than I did at the depth of the 2022 market or the depths of the 2018 market, when I think there were more existential questions around crypto. There's no existential questions now. It's just a matter of how fast can the fundamentals require investors to re-rate their price. I think eventually they will, but I think the slope will be maybe more gradual than previous bounces. People are always asking, like, what is the catalyst at which we bottom? Like, we can point to one event that will cause us to V-shape and up. And that's not, I think, the right mental model. I think of like a scale where you add a pebble onto one side and it tilts a little bit, and a pebble and it tilts a little bit. And eventually you put enough pedals that it falls to zero, and that's where it really takes off. I think the same thing is true here. So the tweet I was talking about were all the different catalysts that I think will contribute to the bear market being over and us moving up. Some of them are very specific. The US possibly passing the Clarity Act would be a catalyst because it would put a firm regulatory floor that is persistent in the US for a long time. Progress on quantum from Bitcoin core developers, because there are parts of the Bitcoin community, whether they should be or not, there are parts of that community that are worried about quantum and they want to see it being taken seriously and addressed. I think as that information comes out, that will be positive. Kevin Warsh being installed and showing the market that he's more dovish than maybe the perception is, I think will be a catalyst. The rise of agentic finance as a new narrative for crypto to build on, I think is a big emerging catalyst. I would note, if anyone hasn't yet read Stripe's 2025 investor letter, which I think came out a few days ago, they talk about how most internet transactions will be agentic driven and on blockchains with billions of transactions a second. when you have a company like Stripe, maybe the most important payments company emerging in the world, saying the future of agentic finance that is built on blockchain, that's a pretty good catalyst. I think as you start to add these up, eventually that scale goes like this, and we enter a new bull market. So I think a lot of that plays particularly into the hands of Bitcoin specifically. I think a lot of if you play out what happens in most of the extreme AI scenarios, that benefits Bitcoin. When you play out what happens with on a macro scene from a quantitative perspective, that plays into Bitcoin. So I think it's uniquely well positioned. I also think it'll be a major coin rally, so I'm aligned with that. I think Ethereum is extraordinarily well positioned. I would say my own view on crypto is there's a little bit of a barbell thing that is interesting, which is that I think Bitcoin and Ethereum are really interesting. And then there's a messy middle, which I think may struggle. And then some of the DeFi apps, I think at these levels are at least worth considering. There's improving tokenomics. The valuations are relatively low. And you are seeing institutions building on things like Morpho and Aave and Uniswap. And I think that may be the place where investors focus at the mega cap end, and then picking and choosing select apps where the valuations have been crushed.
Hougan also outlines a strategic framework for thinking about crypto investments in this evolving environment. At one end of the spectrum, large-cap assets like Bitcoin and Ethereum remain highly attractive due to their dominant network effects, deep liquidity, and growing institutional adoption.
We're going to talk about Bitcoin, and we're going to discuss bear market structures. One of the reasons why bear markets are so challenging to navigate is that a lot of times Bitcoin spends a lot more time going up in bear markets than going down. Now, that might seem counterintuitive, but when you think about it, for months at a time, the price of Bitcoin will generally trend higher, and then for like a week or two, it'll capitulate to a new low. And during that time, there's a lot of people panicking, and the people that have been bullish since the top will keep telling you to buy the dips, it keeps dipping, and then eventually you form a low that then holds as the low for a while until it doesn't. And so in bear markets, what you'll notice is that a lot of times Bitcoin will spend more time generally trending higher than trending lower. Think about the low that Bitcoin set on November 21st. Think about that low. Now, what you'll notice is how Bitcoin generally trended up for a couple of months, right? It ended up putting in a local high on January 14th. But when you think about when the low was set to when the high was set, Bitcoin was trending up for about 54 days before it fell off and then broke down. Now, think about how long Bitcoin dropped before setting the new low. It only dropped for 23 days. So in this area, Bitcoin went up about twice as long, more than twice as long than it went down. You see that? In terms of where the lows were. So you had a low, you generally trended up for 2 months. I'm not saying every day was a higher high. I'm saying that the market was putting in higher lows for 2 months almost, and then it dropped down. So you spend 2 months going higher, and everyone that was bullish at 120K will then call for the super cycle and say that this is a bull market, and then it's not, right? And the bull market is in fact over, and they just don't want to believe it. And then what happens is Bitcoin then breaks down, and when it breaks down, they get quiet, right? And they start, they get quiet because they knew they were wrong. And then when another low is set, they then start the price cheerleading again, which is difficult for a lot of people. And what I would tell a lot of people here watching is, and I've said this many times, there's two different types of, I think, people out there when it comes to Bitcoin price action. There's people that actually try to analyze the markets, not that those people are always right. Anyone is going to get things wrong all the time. So there's people that try to analyze the markets and manage risk, and then there's price cheerleaders. And price cheerleaders are always bullish, no matter what. Now, you could argue that being a macro perma bull is better than being a perma bear. There is nothing wrong with being a price cheerleader. I myself, at times, just fall into that category. You know, if you buy Bitcoin in the depths of the bear market and you come out of it, it's okay to just cheerlead the price for a while. Where it becomes difficult is the people that don't really pivot when the bear market arrives, because then a lot of people sort of take their price cheerleading as market analysis or risk management when all they would ever do is bull post. Okay. Now, is it true that Bitcoin has generally trended higher for years and years and years? Absolutely. Right? Absolutely. So there's nothing necessarily wrong with being a perma bull. But one problem is when you look at like the price of Bitcoin against gold, it's at the same valuation today that it was in 2017. So you'll have people that will say you should never trade it, or that, you know, you should just hold it and you never sell your Bitcoin and whatnot. And I'm not suggesting that you need to go panic sell now. Certainly not after Bitcoin has dropped 50, 60% or 53% or so. But the point is, you know, selling, if you sold Bitcoin at the end of post-halving years, that was better than just holding it and realizing that you broke even compared to gold if you bought Bitcoin in 2017. Now, that's a crazy thing, because that was almost a decade ago. Think about that. Bitcoin is at the same price today against gold that it was in 2017. So you're talking about a decade, because it's 2026 now. A decade, and the price of Bitcoin hasn't really gone anywhere with respect to gold. And so that is at least some justification for not just saying that that assets always just go up and to the right. On their USD pairs, a lot of them do. But when measured against other things, they don't always necessarily do that. Okay? So, again, there's a difference between a price cheerleader and someone trying to manage risk. Now, look at this. Look at the bear market structure. You see how it was trending up? You set a low at 80K, and then the market trended up for 2 months, basically, before breaking down. And where did it find support? 60K. And guess what's been happening since 60K? Bitcoin generally trending up. You see that? Same structure. Bottomed at 80, trended up. Bottomed at 60, trending up. But it will likely break down. That's my guess. My guess is that this will eventually break down within the next couple of months. Usually you'll find the next area, the window of weakness for Bitcoin in midterm years, is around that late March, April timeframe. So now you see the bear market structure, higher lows, and then you quickly capitulate to a new low. So then the bears don't even really feel like they're right a lot of the times. They're right for like a week or two, and then the market trends up for a while, and they're right for a week or two, and then the market trends up. But then you look back and you realize, oh, well, the whole thing was a bear market. You just couldn't convince people of that in the bear market. They were always convinced of another narrative, whether it be Jane Street, whether it be the ISM, whether it be whatever, the price of oil, the labor market, there's always something. Now, compare this structure to the bull market structure, and look how it's the polar opposite. In the bull market, Bitcoin was trending down for a lot of the time. You see that? You see how Bitcoin would generally trend down? Isn't it fascinating how Bitcoin did that back then, and it does the reverse today? So in the bull market, Bitcoin would go down and then pop up and then go down and then go, like, see that structure? How it would trend down, and then from those lower lows would go higher. And then it changed. You can see the structure change. Then it would trend up and go down. Trend up and go down. So you can see the difference, right? You see the difference there? How we went from putting in lower lows to the continuation of the bull to higher lows to the continuation of the bear. So to me, this still looks like a bear market structure. Still looks like a bear market structure. Is it true that at some point we'll put in higher lows and it'll be the end of the bear market? Yeah. Look what happened in 2022, right? You trended up and then eventually we started the new trend. And back then it was similar, right? You would trend up for a while and then you would break down. You see how it was the same thing? You would trend up and break down. We're doing the same thing. We trend up, we break down. We trend up, we break down. The problem is that February in the midterm year is typically far too early to call a low, right? It would have been like calling the low in February of 2022 or in February of 2018 or in February of 2014. Was it a low? Yeah, it was, but it wasn't the macro low. It was far too early to call for the macro low in February. So that is why I remain bearish on Bitcoin. That is why I continue to fade all these narratives that will pop up. And that is why I think the best course of action for me is to just tune out the price cheerleading and look at this objectively and say, you know what? As much as I would like to see Bitcoin go up, I still own some. It's not like I don't own any. As much as I would like to see it go up, and as great as that would be, you know, to get new people into the space, it's just not the most likely outcome right now. And I've gotten on Twitter Spaces a lot with people, and they all have their narratives. They're talking about ETF flows, they're talking about institutions, they're talking about, you know, all sorts of things. But the harsh reality that I think it's difficult for people to accept is every single one of those narratives was just as relevant 5 months ago as it is today, and then it still did not stop Bitcoin from dropping 50%, right? You could have said, oh, but the institutions, but the ETFs. You could have said all of that back in October, and Bitcoin still topped out, and Bitcoin still dropped 50%. So narratives are easy to come by. And a lot of people flip-flop. They'll be bearish when the market goes down. They'll be bullish when the market goes up in the bear market, right? Like, there's a lot of guys that I see do that. They'll be bearish in these phases. But the minute that the market starts going up, they'll flip, and then they'll flip back when the new low is set. That doesn't help anyone, right? That's just trading on emotions. A lot of people do that. That doesn't help you at all. So be aware of that. Be aware of the constant flip-flopping. It's okay to flip-flop a position, right? Like, it's okay to pivot. But if you flip-flop every week based on the short-term price action, that's how you get wrecked in midterm years. And the name of the game in midterm years is to control the drawdown in your portfolio to survive the midterm year so that you have capital to enjoy in the next bull market. That's what I've fallen into in the past, is trying to get too cute, timing counter trend rallies and then not fully knowing exactly where they happen and why and when. And, you could have looked at a lot of these lows and thought they were going to be lows at other levels, right? I mean, look at this. You could have made the argument that 75K could have been an area we bounced, but instead, or 74K, but instead we went low it and it's been providing resistance. So perhaps the reason why Bitcoin struggles to get through 75 is because a lot of people bought there and then water. And now anytime it goes back up, they sell. They just want to get out of their position because they didn't time the counter trend rally as best they could, right? Instead of buying at 75K, they should have bought at 60K. But it's so hard to know exactly where things are going to bounce on the way down. So far, it's been 80, 60, maybe the next one's 40, maybe 50. I don't know. But we'll take it one step at a time.
The crypto industry has entered a new phase of maturity. The fundamental question is no longer whether blockchain technology will survive. Instead, the debate has shifted to how quickly real-world adoption will translate into higher valuations. The current bear market reflects a temporary mismatch between price and progress. While sentiment remains cautious, the ecosystem continues to expand through institutional investment, technological innovation, and new economic use cases.